Most Americans don't just buy the wrong life insurance, they overpay for it, misunderstand it, and in some cases lose tens of thousands of dollars without even realizing it. And here's the most shocking part. According to multiple national studies, nearly 70% of Americans who currently have life insurance either bought the wrong type, bought too late, bought too little, or were sold a policy that benefits the insurance company more than their family. Today I'm going to show you exactly how this happens, why so many Americans fall into these traps, and the hidden truths the industry hopes you never learn. By the end of this video, you'll understand more about life insurance than 99% of people, including many licensed agents. Let's get into it. Life insurance is one of the most misunderstood financial products in America, and yet it's also one of the most aggressively marketed ones. Companies spend billions every year running ads that tug on your emotions, protect your family, leave a legacy, make sure they're safe. And while the intention sounds good, the reality is much darker. A huge percentage of Americans end up buying policies they stand to need, can't afford, or don't understand. This isn't your fault. The system is built this way. Unlike other financial products, life insurance is sold, not bought. That means most people don't wake up and research a policy, they rely on someone selling it to them. And that's where mistakes begin. Let us start with the biggest mistake of all, understanding the difference between term life insurance and whole life insurance. Most Americans don't just misunderstand the difference, they don't even know there is a difference. Term life insurance is simple. You pay a monthly premium for a set number of years. If you die during that time, your family gets the money. If you don't, the policy ends. Whole life, however, is marketed as a lifelong policy with a cash value that grows slowly over time. It's sold as a savings tool, an investment, and a tax shelter all in one. Sounds amazing, right? Well, not quite. The truth is, whole life insurance is often 10 to 20 times more expensive than term life. And most Americans who buy it either cancel it, surrender it, or let it lapse because they can't keep up with the payments. Here's the shocking statistic. More than 80% of whole life insurance policies are never paid out. Not because people don't die, but because they drop the policy long before they do. Companies know this, yet they push whole life harder than any other product. Why? Because whole life policies are incredibly profitable. They generate huge commissions for agents and long-term cash flow for insurers. So, while term life is better for the average American, whole life is better for the people selling it, and that's exactly why the marketing focuses so heavily on the benefits while hiding the drawbacks. But the mistakes don't stop there. Another major problem is that most Americans buy life insurance at the wrong time. They buy it too late, if in their 40s or 50s, when premiums are much higher. Or they buy it too early, right after their first job, without understanding whether they actually need it. Life insurance should be bought when you have dependents who rely on your income, not just because a commercial or an agent told you it's smart to have. Yet millions of young Americans buy policies before they even need them, and millions of older Americans wait too long and pay sky-high premiums as a result. Another trap comes from workplace life insurance. Many employers offer free or low-cost coverage, usually around 1 year's salary. That's not a bad start, but here's the catch. Most Americans think this is enough, and it's not even close. If your family relies on your income, 1 year's salary won't last long. And here's the more dangerous part. When people change jobs, they often lose that coverage. Suddenly they're uninsured. And if their health is changed, getting coverage again is harder and more expensive. It's like walking a financial tightrope without realizing you're doing it. Now let's talk about another huge issue. Americans underestimate how much life insurance they actually need. Most people buy around $100,000, maybe $250,000, without ever calculating how much their family would realistically require. But when you factor in mortgage payments, education costs, medical bills, debts, and living expenses, even a $250,000 policy can disappear in 2 years. The formula most financial experts use is simple. Multiply your annual income by 10. But the average American doesn't know this. They rely on insurance companies to recommend an amount, and guess what? The recommended number often benefits the company, not the family. Then there's the issue of hidden fees. Many Americans don't read the fine print, not because they're careless, but because life insurance contracts are written in complex, technical language meant to confuse. Some policies have surrender fees, administrative fees, and investment management fees that can eat away at the cash value long before you ever see it. And because these documents are intentionally long and complicated, most people don't understand what they're buying, which leads to frustration, regret, and wasted money. Another shocking truth is that many Americans are buying life insurance for the wrong reason. Life insurance should be about protection, not investment performance. But the industry promotes life insurance as a wealth-building tool, a retirement plan, or even a replacement for a 401k. This leads people to misunderstand its purpose entirely. Life insurance is not a high-return investment, it's financial protection. And while advanced strategies exist for the wealthy, the average American doesn't need a complex policy. It needs something simple, affordable, and effective. And speaking of wealthy Americans, they use life insurance in a completely different way than everyone else. They treat it like a tax strategy, not just protection. Through something called infinite banking, they borrow against the cash value of their policies tax-free and use it to invest or grow wealth. But here's the twist. This only works if you can afford extremely high premiums, usually thousands of dollars per month.
Oh.
So while influencers online glamorize this strategy, it's not realistically accessible to most people. Let's dig into another major issue. Americans trust insurance companies too much. They assume the company will recommend the best policy or that the agent will act in their best interest. But in reality, most agents are paid on commission, which means they earn more by selling more expensive products. It creates a conflict of interest that most buyers never see. Consumers get emotionally sold on protecting their family, and companies profit massively from this emotional leverage. Now let's look at the data behind all this. Studies show that only 30% of Americans fully understand their life insurance policy, and more than half of policyholders don't know exactly what they're paying for. That means millions of people are spending money every month on something they don't understand. And because insurance is often long-term, these mistakes compound for years. Another hidden truth. Most Americans don't update their life insurance. They buy a policy at 25 or 30, and then keep it unchanged even after major life events like marriage, children, or home ownership. As a result, the coverage they bought no longer matches the life they live. You'd be shocked how many people still have their ex listed as their beneficiary. These mistakes only become visible when it's too late. So what can be done? The answer is education. Americans need to understand that term life insurance is usually the best option for most people. It's cheaper, simpler, and does exactly what insurance is supposed to do. And if you decide to get life insurance, the best time is when you're young and healthy, not after a scare or a health issue. It's also important to calculate your coverage properly, update your policy regularly, and avoid policies that promise unrealistic returns. At the end of the day, the biggest problem isn't that Americans don't care. It's that the system is designed to confuse them. And when people don't understand something, they tend to avoid thinking about it altogether. Life insurance becomes something you buy quickly and forget about, even though it's one of the most important financial decisions you'll ever make. If you've watched this far, congratulations, you now understand the truth that the insurance industry doesn't want most people to know. And with the right information, you can protect your family without wasting money or falling into the traps millions of Americans face every year. Thanks for watching, and stay tuned for more insights on Global Wealth Lens.